Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those thick corporate filings, maybe even find a hidden deal or two. Grab some popcorn because today we are diving into Ramaco Resources Inc., their latest Form 8K filing. This report is about some pretty significant financial maneuvers they've been up to. Think new debt, new agreements, and big money being moved around. It's all about ensuring the company can keep growing and operating smoothly. Before we get into the nitty-gritty, if you dig getting these simplified explanations of complex financial documents, make sure you are subscribed. It really helps us out. And hey, we have a great community over on Discord, all linked in the description below, so you can chat with us and other viewers. Okay, so Ramaco Resources has been busy. They've announced a substantial offering of convertible senior notes. Now, what does that mean? Essentially, they are borrowing money, but with a twist. These notes can be exchanged for company stock under certain conditions. This is a common strategy for companies like Ramaco Resources to raise capital without immediately diluting existing shareholders too much, but it does create future dilution potential. On the 4th of November 2025, Ramaco entered into an underwriting agreement to issue $300 million worth of these 0% convertible senior notes due in 2031. That 0% interest sounds amazing, right? But remember, the company is offering the option to convert these notes into stock. The underwriters also had an option to buy an additional 15% of these notes to cover any extra demand, which they fully exercised. So we're looking at a total offering of over $345 million. These notes are senior unsecured obligations. This means they're basically IUs from the company. They rank equally with other senior unsecured debt. They are, however, subordinate to any secured debt and structurally junior to any debt held by their own subsidiaries. So if things really go south, the subsidiary debt holders get paid before the note holders if the parent company goes bankrupt. The notes themselves don't pay regular interest. Instead, special interest kicks in if the company fails to file certain reports with the SEC. The notes mature in 2031, but investors can convert them into shares of Ramaco's class of common stock starting in August 2031, or earlier if certain events happen. The initial conversion rate is set at about 30.5 shares for every $1,000 of notes. This translates to an initial conversion price of roughly $32.74 per S-share. Ramaco can choose to pay back these notes early starting in late 2028, but only if the company's stock price is performing really well. Specifically, if the stock price stays above 130% of the conversion price for at least 20 days. They can't redeem less than $100 million of these notes at a time to ensure there's still a substantial amount outstanding. What happens if a big change happens at Ramaco? If a major event like a merger or acquisition or a delisting occurs, note holders can force the company to buy back their notes. This is a protection for investors, ensuring they can get their money back if the company's structure changes dramatically. This section details what happens if Ramaco messes up. Events of default include things like not paying back the notes missing SEC filings, or if the company goes bankrupt. In case of bankruptcy, the entire amount owed becomes due immediately. For other defaults, the trustee or a significant portion of note holders can demand immediate payment. However, there is a special clause here for reporting failures where the main penalty is just extra interest payments for up to a year, after which other default provisions kick in. It shows a bit of flexibility for the company as long as they are upfront about their situation. On top of the new notes, Ramaco also amended its credit agreement. This is basically a modification to their existing loan arrangements. They brought in more banks and lenders and made changes to permit this new convertible notes offering and to facilitate something called capped call transactions. The key here is that these amendments allow for up to $1 billion in convertible debt, which suggests they might be planning more fundraising down the line. Now let's talk about the capped call transactions. This is a bit more complex. Ramaco entered into these private agreements with financial institutions to essentially hedge against the potential dilution from the convertible notes. If the company's stock price goes up significantly and a lot of notes get converted, the dilutive effect on existing shareholders could be substantial. These capped call options are designed to offset that dilution. They will likely buy back shares or provide cash to mitigate the impact. The cap price is initially set at $54.5625, which is about 125% above the initial stock price in a concurrent offering. The cost for these protections was around $32.8 million. To go along with the convertible notes offering, there was a concurrent delta offering. This is where the company essentially facilitated a short sale of about 2.2 million shares of its class, a common stock. This means they borrowed shares and sold them in the market. Why do this? It's often to allow investors in the convertible notes to hedge their positions. If the stock price drops, these investors can buy back the shares they shorted at a lower price to offset losses on their notes. Importantly, no new shares were issued by Ramaco in this part of the deal. They were borrowed from third parties. This section basically just points back to the indenture details we already covered, saying that the creation of these notes is a direct financial obligation for the company. Here we see that Ramaco issued press releases on the 4th of November and the 5th of November to announce these offerings. This is standard practice to keep investors informed. They put out initial announcements about the proposed offerings and then follow-ups about the pricing and completion. And finally, the exhibits list. This is where you find the actual legal documents. We have the underwriting agreements, the indenture itself, the Fifth Amendment to their credit agreement, and the form of the capped call confirmation. It's a lot of paper, but it contains the nitty-gritty details of what Ramaco has agreed to. So what's the big picture here? Ramaco Resources is aggressively raising capital through convertible debt. This shows their ambition for growth, but also their willingness to take on financial leverage. The capped call transactions are a smart move to protect existing shareholders from dilution, but they come at a significant cost. The concurrent Delta offering is a bit of a financial dance to help investors hedge their bets. Looking at the overall strategy, it appears Ramaco is betting on continued growth and a rising stock price. The convertible notes are a way to fund that growth now, with the expectation that they can either be converted into equity at a profitable price or eventually paid back. The success of this strategy hinges heavily on their operational performance and their stock price trajectory. A key thing to watch is how these convertible notes play out. If the stock price surges, the conversion will dilute existing shareholders, but if it stagnates or worse, the company will have to come up with the cash to repay the debt. The new credit agreement amendments suggest they have the banking relationships to support their plans, but also signal ongoing reliance on debt. Overall, Ramaco appears to be playing a dynamic game of finance. They are using sophisticated instruments to manage their capital structure and fund their growth. The question remains whether their underlying business performance will justify these financial maneuvers and ensure a positive outcome for all stakeholders. Alright, that is our breakdown of Ramaco Resources' latest filing. What is your take on these numbers and what they signal for the company's future? Do you think convertible notes are a smart move for growth? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.